Good morning today, or afternoon, wherever you are. Today is Monday, April 14th, 2025. Hope you're doing great. And we're going to talk about the US dollar today. I don't think enough attention has been given to it. The media certainly hasn't been talking about it. And it'll have a huge impact on your portfolio. So here's it's DXY, US dollar index. It's off today, 0.38%. Which is not too bad, but I want to show you the range and look at the 3-month return, down 9.3%, year to date down 8%. And I was curious as to how many times this has actually happened in the last 100 years. So I chat GPT'd and asked how many times in the last 100 years has the US dollar fallen more than 8%? And if you look at these time frames, you got the early 20s, that's post-World War I. Deflation led to substantial decreases in the dollar. So because of deflation, the dollar declined. Following World War II, so another war, high inflation, dollar declined. 1970s, now 1970s were interesting because we had really high interest rates. And again, significant inflation. So decline in the dollar. 1985 to 87, the Plaza Accord of 85 led to a coordinated effort to depreciate the dollar, resulting in a significant decline in its value. 2008, during the global financial crisis, the US dollar index reached a low of 70.698. And 2022, the U.S. experienced high inflation of 8%, making one of the highest annual increases in recent decades. So inflation is tied to the move in the dollar. And it's interesting that this effect in the dollar is affecting everything. It's affecting bonds. It's the reason the bond market basically collapsed last week. The 10-year Treasury, which is the go-to indicator in terms of a healthy stock market, had a move of 70 basis points in the 10-year Treasury. And so with that very high move in the yield, the values decreased, and a lot of traders were stuck with their bonds. They couldn't, Japan sold US Treasuries last week, and there were other sellers coming into the market, but they couldn't, some of them couldn't unload their positions because the bond market just moved so quickly. So that is why Trump, the US, changed its policy, came in and said, we're gonna ease up on some of these tariffs because the bond market was absolutely collapsing. Now, you've heard me say before, friends don't let friends buy bonds. So if you have bonds in your portfolio, which many of you actually do in mutual funds, if you have any mutual fund that has the title, the word balanced or fixed, or corporate or debt, any of those are indications that you have bonds in your portfolio, and I'd highly recommend you selling those, getting out of those type of positions. Heck, you can even roll into an S&P 500 index fund at a terrific time because that has sold off 13% year to date as well. So there are things that you can do right now to protect yourself on the downside, and diversification actually isn't one of them. Rather, when you go into your portfolio with a focused intention of making money in the equity markets, that would look like a handful of stocks, 8 to 10 maximum companies in your portfolio. You can start to get a feel for when is a good time to buy those versus selling. So you're here with the Stock Picker, and thank you so much, and welcome. We must have onboarded 100 new people just last week alone. So we're thrilled that you're here. We're grateful that you're here. And I'm the founder of the software along with some partners of mine, and we're in here every single Monday live streaming. So if you have any questions that you'd like me to cover or answer, please post them here in the forum. So if you just go to our stock forum, you can ask questions here. I'm in here on a frequent basis. Here's our main stock forum. There's 486 comments. Happy to answer them. And or just go to the live stream here from the homepage, which is right here. Click join live stream and you can ask your question in that platform as well. So if you ask a question today, I'll answer it on next Monday's live stream. So again, thank you and welcome, and obviously welcome to our subscribers who have been with us for a long time. Okay, let's look at gold and silver prices. You know, I've been like pounding the table on buying gold and silver. Highly recommend it. If we just do an overlay of the Dow versus, look at this, the Dow Jones returns for the year versus gold. I mean, it's just incredible to see the appreciation in gold. Gold is up about 38% in the past year. Let's look at silver. Silver is up. It looks like currently, am I showing a percentage here? That is just through today. Yeah, April 44. Okay, so up, I would say, is that 15%? Looks like 15% to me. Much higher than the Dow Jones. Let's look at it compared to the S&P 500 and even higher versus the S&P. So some of these precious metals you can't go wrong with. This is the company I use to buy and I was going to say buy and sell, but I haven't sold any. But to buy, it's silvergoldbull.com or .ca, depending on where you live. And this is their tracking of the markets and the dollar. So look at as I overlay the dollar here in blue, you can see the declines in the dollar, and look how much higher these precious metals are. There's a clear inverse relationship right now with precious metals, and there's a ton of money flocking to gold. Gold is that safe haven. There was a lot of selling in silver last week. You can see the big drop here when it was at 49, the high 49.22 an ounce. That's in US dollars, dropped down to 42. That's because everyone was selling their silver contracts and their physical silver, moving it over to gold. So that caused the big upward move in gold. I still don't think it's finished. I think it's going higher. And at these levels, if you can pick up the actual coins themselves, I think it might serve you in the long run. Gold has always been that thing that has held its value over time, and now it's making a considerable move, huge move this year, up looks like 38% in the past 12 months. So super amazing run, just incredible what's gone on. If we stretch it out over a longer period of time, looking at the chart back to 2010, let me take off some of these other, just looking at the commodity itself, you can see, you know, much, much cheaper and really nice return. So I do recommend you have part of your portfolio in gold and silver, but the actual physical coins. And for gold, you're looking at a $50 face amount. For silver, a $5 face amount. And when I say face amount, what I'm referring to is when you look at the coins, the amount on, so these will be 1 ounce, 1 troy ounce, 99.9999% pure. And if you notice on, this is called the face amount. It's the side of the coin that shows a face, and it's $50. So that'll be showing up on all of the gold coins, and on silver coins, you will start to see on the face amount is the $5. So if I just click through, we're on the Canadian site, and that face, see the face is showing up, and you see 5. So that has a value, a face amount value of $5, but it trades at a premium in the market, which right now silver is at $44.86 Canadian a troy ounce. So if you buy through silver gold bull, you can actually also sell to them. And if if you have your coins and you're not sure, you can like click sell to us if that's something that you wanted to do, and you just contact them with what you have here. Please add products to your sell cart in the catalog below and follow the steps. So you can actually just do it online through their site, and there you go. You have liquidity with the coin, so you don't have to worry about being stuck with them. All right, let's get into markets. Are moving up today. We're starting to see some decent price action. I don't know if it's going to be sustained. When I look at in Google what are what indicators of a healthy economy, up pops this message: low unemployment, steady inflation, positive consumer spending, and increasing GDP. Well, we don't have any of that. We just don't. We don't have low unemployment. We don't have low inflation. We don't have positive consumer spending. If anything, consumers are actually doing their best to save money right now, not spending it. We don't have an increasing trade supply, a positive GDP. We have a negative GDP. I showed that on last week's call. And, I don't see rising retail sales. Even Louis Vuitton posted earnings and they were lower than the previous quarter. And that doesn't normally happen in the luxury goods space. Louis Vuitton, other than their leather goods, which are their bags, their luggage, things like that, they also own the brand Moet Chandon, which is, the champagne. And so all of their key brands are showing less sales. So even when you have that level of a wealthy buyer, consumer is not spending as much, there's some tricky things. Another thing, a healthy housing market, we certainly don't have that. A stable or growing housing market. We actually have a high level of folks that are behind on their mortgages, but Fannie Mae and Freddie Mac are doing their best to not allow this information out. And there's a lot happening behind the scenes where mortgage payments are being made for people by lenders, as well as tax payments are being made and insurance payments, because they're not making, there's a percentage that aren't making these types of payments, but they're being paid for them. But of course, all with liens on those properties to remove the homeowner at some point out of the property, and the bank will step in. We certainly don't have high consumer confidence. And this is what's telling me we don't have there's not even confidence in the US dollar anymore. So we're starting to see this big 52-week range at 9. The low is 99.01. The high was 110. That's a 10% decline, almost a 10% decline in the range for the last year. And this is getting very, very tricky. There's way more than meets the eye than just tariffs and economic uncertainty. You have an economic environment that is very weak and unstable, and then you have an equity market which is divergent from that economy, because the stock market is based on emotion, right? If you think about it, people buy and sell based on emotion, and although institutions will be buying and selling based on their high frequency trading programs, and yet there's a lot of the private individual investor which is making the changes in the equity market. So there's a bit of enthusiasm today as the Dow is up 400 points, 1%. NASDAQ is up 153, less than 1%. And, I just think that more and more is coming in terms of information for us to digest this week, as well as, I guess the tariffs were pushed back 90 days. Well, that doesn't solve any issue or problem. It just delays the challenge that we're going to have at some point. And at some point, there's got to be a real understanding of what is happening in the economy. And as the economy gets weaker and weaker, it will be reflective in stock prices. It may not be today or tomorrow, but at some point. So how can you still participate in this market and do well? Well, I have a couple of suggestions for you. Let's say you like a stock, Costco, and you're thinking, I'd really like to buy it, but it's up $21 today. But wouldn't it be nice to be paid to buy stocks? And if you look at the chart looks fantastic. Actually, it looks like a big breakout coming, a golden cross. If it crosses, it looks like it did just cross above that SMA 50 just today. And it threaded between the short-term averages, the EMA 15 and the SMA 15 back here, April 10th. So just last week, it made that thread, and that's always a good thing, as you know. But if it can hold this thread now, this golden cross move above that SMA 50, we're going to have an even bigger run. You've got the MFI at 53 in the sweet spot. Things looking good. So if you think, okay, I'd really like to take a position in this stock, if you go over to options, and you can actually get paid. I think I mentioned this on last week's call, but I didn't go into much detail with it. But if you look at puts, you can get paid to buy stock. And this is how it works. You can sell a put to be put, and it's just like it sounds. You're going to be put the stock. Now, if I look at, so right now the stock is at $983. And if you're thinking, I really would like to take a position in it, I think it'll do well, but I want a better price. So if you were to look at, let's say, the 972.50s, you would be paid $1,050 today in order to be put 100 shares at $972.50 by this Friday. So these are April 17th contracts. That's when they expire. I'm on the put tab, and you can get paid. So now what happens if the stock moves up? You're not ever put the stock. You don't have to buy the shares because that put contract will expire worthless, but you get to keep this premium of $1,050. It says $10.50, but that is per 100 shares. So you just multiply 100 times 1050, and that's how you get the 1,050. So that can be an option for you where, you don't necessarily have to, you may or may not be put the stock, but what a great contract price to consider as another strategy to take a position in stocks. Now, if the stock is below $972.50 by Friday close of market, you will most likely be put the stock, but that isn't really your cost basis. Your cost basis is $972.50 minus $10.50. So you're looking at $961 a share is what you'd ultimately pay for it, right? Because you received the $10.50 up front, and the strike price was $972.50. So even if you bought it, even if you were put the stock at $972.50, your cost basis is still another $10 lower because of that premium you receive. Hope that makes sense. Hope that's helpful for you. So, I think my parting words for today is do your best to not be stressed, period. Like, there's so many shenanigans going on in the economy to keep you distracted, to keep you off your game. It is very off-putting, everything that's been going on, but I would just like to say to you, please do your best to stay focused on your big money goals. Stay focused on what you're wanting to accomplish. Money is in motion. That is the good news about this equity market. And how do I know that? Well, I just go right over here from our homepage and I look at the VIX. VIX is the volatility indicator of what is going on in this market. And it's right around 31 73 here. So the market isn't quite as volatile today. But when you see that volatility number at 45 and 50 and even higher, I think last week the VIX at one point got to like 70. It was crazy. That means you're going to see the big swings in the market. So when you track the volatility, the VIX, and you look at some stocks, I talked about this last Monday, where you can swing trade, buy low in the morning and sell high later on. I think that might be one of the better strategies right now to make money in the equity markets, because then you're not stuck with a stock that could potentially move against you and hurt your portfolio returns. So just a couple ideas I wanted to share. Again, thanks so much for being a part of our community. Super grateful to all of you. My team and I thank you for your support. And we're just going to keep rocking and rolling and help you make the most out of your investments. Have fun doing it. That's part of it, right? Why bother investing if we can't have a good time, and implement some strategies that are really going to help make a difference in your portfolio. There's a lot more coming, and I'll see you next Monday. Bye for now.